Hello, and thanks so much for checking out the Coin Stories podcast video page. I'm Natalie Brunell, and I'm on the road in St. Louis right now for some fun speaking engagements on Bitcoin. But I wanted to make sure to get another episode out to you guys. And I had a chance to have my second interview with gold bug Peter Schiff. We broke down everything that's wrong in the current financial system. But first, I want to share this podcast does not provide financial advice, and this episode is brought to you by the Bitcoin Conference. It's going to be held in Miami next year, April 6th through 9th, and it's going to be the biggest Bitcoin conference yet. You can get 10% off your tickets using the code COINSTORIES and the link b.tc/conference. This episode is also brought to you by OKCoin, one of my favorite places to buy Bitcoin, where you can DCA without the crazy fees. OKCoin is the fastest growing exchange, serving over 190 countries globally with the easiest onboarding and lowest fees around. They're on a mission to make learning about and buying Bitcoin easier than ever, and they're all about bringing more financial literacy to everyone, which is something I really care about as well. From being the only exchange to integrate Lightning to contributing over $1 million to Bitcoin core devs, they are doing incredible work to further the Bitcoin ecosystem. You can head to go.okcoin.com/Natalie for $50 in Bitcoin when you sign up. I'm super excited to share this second interview with Peter Schiff. He has some fascinating insights into the state of the US economy, what the Fed is doing, inflation, and of course, we also talked Bitcoin. Here it is. Peter, one of the reasons I wanted to chat with you again is because ever since our last conversation, I had the chance to read your book, The Real Crash. I'm a little behind. It came out in 2012, but it's still so relevant, only now we're in an even bigger bubble. And I love that you present not only the problem, but some solutions for our federal government. And so we arrive at two different conclusions. You are the gold standard, I'm Bitcoin, but let's talk about the problem and some of the solutions. So first of all, this was an incredible book. Why is it still so relevant?
Well, because the government continues to repeat the mistakes that I wrote about. But let me just give you a little bit of a background on the origin of the title. So, I came up with my first book was Crash Proof, right? How to Profit from the Coming Economic Collapse. And that came out in, I think, February of 2007. And so then we had the financial crisis in 2008, right? So it was pretty timely, and the book became a national bestseller. It actually sold a lot more books in 2008 than in 2007 because it was more popular once the crash happened. Because once everything started falling apart, I was one of the few books that was still on the shelves that kind of dealt with the topic. And so then it kind of got a new leash on life and really started to sell, and which is rare. Normally, the books sell more right away. Mine sold some, but then had this whole new spurt after 2008. Well, what happened was a lot of people, if you bought the book, Crash Proof, and then 2008 crash happened, people were saying, okay, yes, you were right. You said a crash was coming and it happened. And I wanted to remind people, or I did often remind people, and then ultimately with a book, that what happened in 2008 was not the crash that I was referring to. Now, I did predict that financial crisis as part of the evolution that would ultimately become the crash. So I did see that coming, but that was not the crash that the title was referring to. The crash that I was referring to still hasn't happened, right? And so what my thinking was, back in 2005-06, when I was writing the book, we had this housing bubble. I knew that it was being created by the Fed and artificially low interest rates in combination with the moral hazard of government guaranteed and subsidized mortgages and all the stuff that was going on in the securitization market and the subprime market that all had its roots, again, with the Fed and the government. And so I knew that when this big housing bubble popped, we would have the worst recession since the Great Depression. We'd have double-digit unemployment, trillion-dollar deficits. I knew Fannie and Freddie would go bankrupt. All this stuff was in my first book. And then I also knew that rather than doing the right thing, the government would look to bail everybody out, prop everything up, reflate the bubbles. So in other words, I predicted QE1, QE2. I mean, I didn't realize they were going to call it quantitative easing. I knew what they were going to do before they knew what they were going to call it, right? So I said the Fed was going to print all this money, the deficits would explode, and they would try to reflate the bubbles. Then my thesis was they would fail. They would not be able to reflate the bubbles because we'd have a crash in the dollar, and that would kind of bring down the bond market and the whole economy. So that was the ultimate end game. I thought the consequence of what the government was going to do to bail us out of a crisis that hadn't even happened yet, but which I knew was going to happen, I thought that would ultimately produce a crash in the dollar. The only thing I got wrong was that I thought that they would try to reflate the bubbles, but they would fail. They succeeded. What I didn't realize was that the world would be dumb enough to actually fall for this a third time, and that the Fed would get away with inflating an even bigger bubble than the stock market bubble of the 90s or the real estate bubble that followed. Instead, we have this everything bubble. And I really didn't get the fact that the rest of the world would become complicit. I didn't realize that, Europe would go to negative interest rates and all kinds of stuff that would happen to kind of delay the day of reckoning for the US and kind of give us a reprieve for a while. But of course, we used that, extra time badly. We simply compounded the problems. So the US economy structurally is in much more worse shape than it was when I wrote my first book, right? And, even and in worse shape than when I wrote the one that you just read. So the crash that I've been predicting since the first book, which goes back to 2007. So now we're talking 11 years, right? 12 years. The crash that I've been warning about that we have managed to avoid is still coming. I mean, it can't be avoided. I mean, that's like a date with destiny, and that's our destiny. We're going to have this crash, except now it's going to be much worse than it would have been had it happened, 5 years ago, 10 years ago, because the problems have gotten that much worse. So it's like, we got a lot higher on drugs before we decided to go cold turkey. And so the effects of that, the hangover, the detox, whatever that period of time is going to be, it's going to be that much worse because, we're trying to get rid of a bigger drug addiction. And while we were addicted, we ended up, doing a lot more damage to our health. So we're in a lot of trouble right now. And so the warnings are even more prescient now and more important to heed than they were back then. And the consequences of ignoring what I'm saying are much greater because the losses, I think, will be far greater for people who aren't prepared.
Yeah, I love what you said in your book about how we need an adult to get behind the wheel because we're careening down an icy, cliff, and we need someone. The crash is going to be bad either way, but we're going to go off the cliff if we keep spending and printing all of this money. Whereas we need an adult to kind of say, "Hey, we've gone too far." What you say in the book is we're already bankrupt. We're already pretty much insolvent. We need to restructure our debts, but no politician wants to admit that, right? So it's like avoid admitting the big problem and just keep printing money so that it looks like everything's still afloat. Meanwhile, you're inflating the bubble even bigger and even more.
And because we can't pay the debts we have, we just take on even more debt to paper it over. So we go deeper and deeper into debt. It's like somebody that can't pay their MasterCard. So then they get a Visa and then they pay their MasterCard with their Visa, and now they need another credit card to pay that one. They just keep, delaying the day of reckoning but each time they do that, they just go deeper and deeper into debt.
Mm-hmm. And that's what's obviously leading to this inflation, which, the mainstream media and a lot of politicians say is transitory or doesn't even exist, or maybe it's even good for us, right? So how come the average person, doesn't get it? Why is the average person believing that we're okay, we print our own money, so we're fine, we're the global reserve currency, we're the superpower of the world? Why don't people get that we're in a situation that we can't reverse very easily?
Well, I don't even think the average person even thinks about any of that. The average person just takes everything for granted and assumes that, there's some kind of invisible horn of plenty and that whatever we need is somehow there. And for some reason, the powers that be are greedy and just, preventing everybody from having all this good stuff. And that we just need the government to just unlock it and share it with us or something like that. So it's not about why doesn't the average person get this? It's why doesn't the average economist get it? Why don't people who have PhDs in economics, who are working for government, who are working for some of the biggest banks in the country, why don't they get it? Right? That's because they've been studying it their whole lives. They're supposed to be smart. And so if those people don't get it, how is the average guy on the street who doesn't have any formal education in economics or finance, how are they supposed to get it? And, it's amazing to me how, many people don't understand something that's so simple. But I think it's because so many other people are trapped in the same delusion. That's part of the problem, because a lot of the people who have PhDs, they didn't always have PhDs. They were students, and they went to college, and they were educated by people who also didn't know what they were doing. So they didn't get educated, they got indoctrinated. So their entire education process, they learned the wrong things. So they get these degrees and they think they're really smart, but they learn from a bunch of fools. So they didn't really learn anything. And, also I think in order to get appointed to any kind of high position in government, you can't be a free market economist, because they don't want you. They want the economists that are going to rubber stamp their spending plans. So you only get to be up on the president's Council of Economic Advisors or something like that if you are, a Keynesian and you just believe in big government. But then those are the prestigious economists that everybody wants. All the Wall Street firms want the economists that worked for government, because that's where they have their status. And of course, all the big universities, the professors there, I mean, it's all socialists on the campus of American universities. So they're not teaching free market capitalism. They just want professors to validate big government and how government can help the economy. So, yeah, I mean, you have so much bad, thought, understanding out there. And then it's all reinforced because everybody else thinks the same way. But there are people out there are really free market Austrian economists who get it. They're just drowned out by a chorus of Keynesians that have, a much bigger soapbox to stand on, and of course, all the mainstream media is pretty much far left. And so they're not really giving any airtime to free market oriented economists. I mean, they're accepting what these government economists say or Wall Street economists say, and they're not questioning it.
Does it surprise you how long we can keep kicking the can down the road? I mean, you predicted that this crash was going to happen by now, and they're only pumping more money in. They haven't tapered. They haven't really tightened. If they did, that would prompt a crash. So I would argue that they would stimulate even more at that point. So where are we at in terms of the cycle?
Well, I didn't put a date on any of my books. I mean, I did certainly assume that it would have happened by now, but I didn't say this is the year that it's going to happen. I just said it's going to happen. And, it doesn't necessarily shock me that we've been able to kick the can down the road for so long. I mean, probably it's because it's been a slow process. So I think if you could have gone back in time to Peter Schiff in 2011 and say, hey, 10 years later, this is what the debts would be, and there wouldn't have been a problem, that would have surprised me. But the problem is, I've lived through the last 10 years. So it's just it's like a slow grinding process. So I'm never surprised that we're able to kick the can for another 6 months, then another 6 months. But, looking back on it, I would have been surprised back then if you messengered through time, what had 10 years had gone by. And I would certainly be surprised if somebody came from the future, from the year 2031, and said, you know what, we're still kicking the can, no problem. The Dow is 200,000 or whatever. And, the national debt is 100 trillion, right? And so far, so good, right? That would surprise me, right? If I found that out. But I'm sure if I lived through it, slowly, that I guess I would be able to accept it. But I can't see where we're going to pull all those rabbits out of the hat to get us to that point. We got to have a crash, and the government won't be able to bail us out with it. I mean, you can't do it because once the crash is the dollar, then it's all over. See, as long as the dollar holds up, the government can bail everybody out, because how does it bail everybody out? Well, it gives them dollars. But if the dollars are what's crashing, then there's no bailout, because what good is it if the government gives you dollars to bail you out of a dollar crisis? Because now you have more dollars and you've exacerbated the crisis, because now you've added to the supply. So the only way to deal with a dollar crisis is to bail nobody out, right? And so when we get to that point, it's everybody for himself. That's why people have got to take action now to prevent themselves. I mean, the problem is going to be the people who decided, aha, Schiff is right, there's going to be a dollar crash, so I'm putting all my money in Bitcoin, because Bitcoin may crash before the dollar, and then what are you going to do? And so don't do that, right? If you want to put a little bit of money in Bitcoin, just take a shot, all right? I mean, I'm not going to say you can't gamble with a little bit in Bitcoin. I mean, I choose not to do it because I'm pretty sure it's a losing bet. But if other people want to make the bet, but you got to keep it in perspective. Do not put the safe money that you don't want to lose into Bitcoin, right? Put your gambling money that you're willing to lose, right? Most people, there is a balance, how much of their net worth they're willing to throw away on a long shot, and how much they want to protect because they can't afford to lose it. So the money that you can't afford to lose shouldn't be in the dollar, because you'll end up losing your purchasing power, but it also shouldn't be in Bitcoin or any cryptocurrencies. But money that you're willing to gamble with, right, in order to hit the home run and like, hey, if I lose it all, no big deal, fine. You want to put some of that in Bitcoin, that's okay.
All right. Well, we agree to disagree on the Bitcoin, but I want to talk.
So you think it's safe though? You think you should put your retirement savings all in Bitcoin? And
I put all my retirement savings into Bitcoin, Peter. Don't get mad. I put all my retirement savings into Bitcoin.
Well, the only good thing is you're so young, although apparently you're not as young as I think you are. But when you lose all your money in Bitcoin, since your retirement is many, many decades into the future, you'll have the opportunity to replenish what you've lost and rebuild your retirement fund.
Well, I'll tell you, I'm certainly not relying on Social Security. That's one of the things you touched on in this book. So I want to talk about a couple of the things in the real crash, some of the solutions, 3 areas that really affect us. So you are now the president. I've elected you. You're also the Federal Reserve Chair. So let's talk about what the Fed action should be. If you were in charge, what would you do? And then we'll talk about some specific areas of our economy and society, like education and healthcare. But if you were in charge right now, what would you do?
Well, first of all, you don't want the president to be on the chair of the Federal Reserve at the same time, right? You don't want the president to have that kind of power. So I'd have to.
I'm cloning you. Well, there's 2 Peter Schiffs. Both of them are Austrian economists, and both of them are in charge. One's in the White House, one's at the Fed down the street.
The first thing, if I was in the Fed, I tried to figure out the best way to close down the agency so that I would no longer have a job, right? Because I don't think we should have a Federal Reserve. But I don't want to transfer the power from the Fed to Congress. I want to give it back to the people. I want a free market in banking. The Fed wasn't always here. There's nothing about the Federal Reserve in the Constitution. We didn't have a Federal Reserve until 1913. So the country made it from 1776 or 1789, whenever you want to start that, all the way to 1913, without a Federal Reserve. And, we didn't even have the Great Depression until the 30s. So the Federal Reserve was on the job during the Great Depression. It's not like it prevented it from happening. But during the 19th century, when we had no Federal Reserve, if you look at the CPI in 1800, it was double what it was in 1900. So we had prices going down for 100 years, which means money gained value. Our money, dollars that people had in their pockets, doubled in value over a 100-year period. So it's like today, people will ask, or I'll talk, or your grandparents will talk to you and they'll say, hey, when I was your age, this only cost a nickel, right? And now it's, $5, whatever it is. And they're always talking about how cheap stuff was back when they were young. Well, if you were born in 1900 and you were talking to your grandfather who was born in like 1830, 1840, he would have said, when I was your age, it used to cost twice as much as it costs now, right? They were talking about how expensive things were, and they went down. So we had a much better monetary system without the Fed. And so we need to go back to private banking, a free market, sound money. The Constitution says that gold and silver are money in the United States, and we need to go back to that because that works. The fiat currency doesn't work. So get rid of the Fed. Now, as far as the president, yes, we should have a president. The president is a constitutional office. So I would not resign the presidency. I would, stay there and serve out my term. But what I would do is I would start by eliminating every executive order that was signed by all my predecessors. But the goal as president would be to eliminate as much of the government that was created really, since the birth of the republic, because we pretty much started with hardly any government. And so almost all the departments and agencies that have been added represented a step in the wrong direction. We started off with really tiny government, and then everything we did made government bigger. So I have to start undoing all of that, bad work so that we can restore the freedom that we lost. So we want to get rid of taxes that as much as we can, regulations, and we want to get rid of all these government programs, all the government spending that the taxes pay for, that the deficits and borrowing and money printing pay for. And we want to get as much freedom back into the economy so that individuals are free to make their own choices, and individuals are free to interact with one another based on their own decisions about what they believe is best for themselves or their family, without the government trying to micromanage their lives and deciding for them what they can do and what they can't do. I mean, as long as you don't interfere with other people. So I don't want to get rid of the laws, against murder or robbery or rape. I mean, those laws existed, before the Constitution because they existed on a state level. And if you go back to the way the Republic was formed, there were 13 colonies that were independent governments. And they came together to form a union, a confederate of states, right? And so, but initially, the primary governing bodies were the individual states. And that's really what I want to return to, which was the vision of the United States of America, is it's really, we should be 50 sovereign states united under a common federal government, but where the federal government really stays out of the affairs of the states and doesn't get involved in economic issues, that the primary focus of the federal government should be national defense, foreign policy, diplomacy, things like that. It should not be getting involved in the internal affairs of people in the states. It shouldn't be, getting involved in education or healthcare or, any of these programs that they're doing have nothing to do with the federal government. They weren't contemplated by the founders. The federal government was supposed to be principally involved with external matters. And to the extent that the federal government taxed us, it was to cover those costs, to cover the national defense. That was pretty much it. And in fact, if you go back to what governed the colonies prior to the Constitution, was the Articles of Confederation. And under the Articles, the federal government couldn't even tax the people. It had to ask the states for money, and then the states would decide if they wanted to collect the money and ship it to Washington. So they looked at that as a flaw. I actually think that was a good feature. They shouldn't have given that up. But they wanted to give the government the ability to tax, but it was very limited. I mean, the government was supposed to live off of excise taxes, tariffs, duties, stuff like that. I mean, the founding fathers certainly did not envision an income tax or Social Security tax. In fact, those types of taxes were prohibited by the Constitution because they were direct taxes, and they could only be levied if they were apportioned apportioned, which is very difficult to do and rarely gets done. So the founding fathers thought that the federal government would pretty much survive on tariffs, which were the popular taxes of the day that were levied. And the federal government had taxes on alcohol, tobacco, firearms, stuff like that, like a sales tax on certain items. And that's what, provided the government revenue. There was no personal income tax. There were no payroll taxes. There was no corporate income tax. And that is the type of society that I would like to return to, where you have a maximum amount of individual freedom and liberty, because that is the reason that America became so successful and we became so prosperous, was because we were so free. We were the freest people in the world, and we became the most prosperous people in the world. And I'm not just talking about the people at the top. America invented the middle class. There was no middle class until, we came up with it. Every place else, there was just rich and poor. There was nobody in between, right? That was a function of America. And it wasn't labor unions. I mean, they try to take credit for the success of capitalism, but the labor union movement had nothing to do with the achievements of the middle class. It was simply the fruits of capitalism being shared by a large number of people.
Yeah, I'm really glad you brought that up, because I want to talk about wealth inequality. You bring up some fascinating historical facts about the income tax when it was created in 1913, how little it was, what percentage of people were actually taxed. Now everybody faces growing taxes. And we hear politicians, as recently as this week, talking about the billionaires tax, that's going to somehow fix the wealth inequality. So many people blame the inequality on capitalism, right? These guys are greedy. They're out of control. We need to rein them in. We need to tax them. Can you correct that myth? Why is it that this isn't capitalism, and why do we see this wealth inequality growing as the result of what government is actually doing?
Yeah, well, first of all, around the time of the income tax, we had a populist movement in the US. And, there were a lot of wealthy people back then. They call them the robber barons, Rockefellers, Carnegies, Mellons, people that became really rich, but not because of the Federal Reserve and because of a bubble, because they created enormously valuable companies that lifted the standard of living of the vast majority of Americans. But they deservedly got rich in the process without any help from government. But there was a movement to tax them more heavily. But the idea was that, hey, if we can make the billionaires pay more, the rest of us could pay less. So the trade-off was, let's have this tax that the billionaires will pay, an income tax, and we can get rid of the tariffs that everybody else is paying. And that was the impetus to amend the Constitution to make that income tax possible, because it wasn't possible based on the original Constitution. They had to change it to give the government new taxing powers to make it possible. But of course, if you look at the original tax rate, it was, I think, 4% or something like that on the super rich. Well, now middle-class Americans are paying 30-40% in income taxes. I mean, nobody would have agreed to the tax if it was that high on the billionaires. But of course, it's backfired, because now average people are paying income tax rates far in excess of anything contemplated for the billionaires. So that's the problem with the efforts today, where the government say, hey, let's have some new tax that's aimed at the billionaires. Well, pretty soon they're going to refocus on middle-class Americans. Whenever the government gets a new taxing power, they always get it under the guise that, it's just for the rich. That way, everybody won't oppose it. But the minute the government has the new power, it just doesn't, it's not limited to the rich. They could use it however they want. And ultimately, they can't get enough money from the billionaires. So they go to the average guys, because there's a lot more middle-class people to tax. But as far as inequality is concerned, look, there's always going to be inequality. Even in socialism, there's inequality. You have a few people that are rich and everybody else is broke. And the people who are rich are the people that are in government, and they have connections and they have power because they know the right people. But under capitalism, we're all not going to be equal, because we're all not equal in our abilities, in our contributions, in our intelligence, in our drive. So people are going to have unequal efforts, unequal outcomes. And so obviously, there's going to be wealth inequality. I mean, you want that. I mean, that's desirable. It's so like if think about it, if you were, you're a kid in school, what if everybody just got an A or everybody got a B? Everybody got the same grade, right? No matter how well you did on your exams, whether you did your homework or not, we had grade equality. So everybody got the same grade. Would anybody learn anything in school? No, why study? You're not going to get any better grade than the guy that doesn't study at all. But nobody would say, hey, it's not fair. We have this grade inequality. We have some guys that did all their homework and studied hard and they got A's. And here's some people that just, cut class and, smoked a lot of pot or, did, whatever. And they got C's and D's. There's inequality here. That's not fair. Of course, well, you get what you deserve. And in capitalism, you get what you deserve. You start a business, you invent a better mousetrap, right? You come up with a product that people want to buy. It improves their lives. Otherwise, they wouldn't buy it. The product is better than somebody else's. Either it's cheaper or it has more features. And in the process, you create a lot of jobs and you hire a lot of people. You get rich, right? Well, I mean, you can have another person that doesn't do anything, just, sleeps late at night, lives with his parents, doesn't do anything, doesn't create anything, doesn't produce anything, doesn't hire anybody. I mean, so, all right, the guy's, he doesn't have much money, but that's fair. What's not fair is when the guy that does nothing says, hey, I deserve more. Let's tax the guy that did all this stuff, that made all these contributions, because I want some of what he created. Because, I think that's fair, that I could just do nothing and live off the fruits of somebody else. But we have extreme income inequality now. That's not a byproduct of capitalism. What's going on now is the Federal Reserve, which is not a capitalist institution, has got interest rates artificially low so that people that have a lot of assets can now borrow money really cheap and buy more assets. And now all those asset values become inflated by the artificially low interest rates. So now the people who are just sitting on assets and doing nothing become really, really rich simply because they're sitting on appreciating assets that are only appreciating because of the artificial manipulation of interest rates. And now instead of selling those assets, they just borrow against them. They never have to pay the money back because the assets never stop going up. And they're living off of the inflation and the cheap money. At the same time, the inflation is destroying the value of average people's wages and savings. And so now you have government coming in and exacerbating income inequality and taking it to a level that is problematic, that would never exist in a free market. Because when you're getting rich in a free market, you're getting rich by enriching everybody else. So all the boats rise together. The government has basically prevented that from happening. So you have some boats rising while other boats are sinking. Capitalism doesn't do that. Government does that. And so people have to understand the difference. And so when they're mad because of what they're looking at, they've got to be mad at the right things. That's why if you go and look at the video that I did on Occupy Wall Street, when everybody was protesting Wall Street because of the bailouts, I went down there to say, don't protest Wall Street for getting bailed out. Protest Washington for bailing them out. If you accept a bailout, you can't blame somebody for accepting free money. Who wouldn't accept it? Government offers you money, well, you're going to take it. The problem is the government shouldn't have offered it in the first place. The government was the source of the problems, not Wall Street. So that's where the protesters should have been, in Washington, not in New York.
Right. Yeah. And we're in such a spiral of debt now that if they were to hike the interest rates, the house of cards would immediately collapse, right? You basically are just keeping that bubble growing bigger and bigger and bigger. And speaking of the government bailouts, I love what you talked about in the book. I never really thought about the FDIC as being a negative thing because obviously you put your money in the bank. You don't even, like you mentioned, you don't even think about where you put your money in the bank. You put your whole life savings in any of the big name institutions. You do less research than you would buying your phone or your TV because the FDIC insures a certain amount, but it allows banks to take very risky behavior because they know that they're going to be bailed out, right? So can you talk a little bit about how the things that seem great on the surface, the subsidies, the government-backed student loans, the government-backed mortgages, all of this is actually allowing banks to become richer and richer, for investment bankers to become, among the wealthiest society members. And it's really actually going to fall on the middle class, because as soon as they take too much risk and need to be bailed out, the federal government is just going to go into more debt doing that.
Yeah, there's a concept called moral hazard that, a lot of people in government have no understanding of. I mean, people understand it in insurance. I mean, the insurance industry understands moral hazard. I mean, let's say, you have automobile insurance. The minute you have automobile insurance, you may drive a little bit more recklessly because you have insurance. If you had no insurance at all, you're going to be extra careful because you're on the hook for all the damage, right? Your behavior is always going to change. Look at the government with subsidized flood insurance. Why do a lot of people build in flood zones? Because the government subsidizes their flood insurance. If there was no government subsidy, flood insurance would be a lot more expensive. And so not as many people would want to live in areas that are prone to floods. But because the government comes in and says, no, you can get insurance that's below what the market would be. Now we have people building in flood zones. And so now every time there's a flood, there's a lot of damage. But without the government, people wouldn't be building in those flood zones. So we wouldn't have to worry about it. So the government creates the problem with the subsidy. Same thing happens with student loans. Before the government got involved in student loans, college was cheap.
Yep.
It wasn't free, but it wasn't prohibitively expensive. I mean, my father and all of his friends, worked their way through college. And what my dad did was he had a summer job. That was it. He waited tables during the summer, and he earned enough money over the summer to pay for his tuition, room, and board, because his parents were, middle class, lower middle class. Or my dad would say he didn't know if he was upper, lower, or lower middle, but he came from a relatively, not an affluent community in New Haven. And most of his friends, their parents didn't pay for their college. But if you were more affluent, if you came from upper middle class, upper class, your parents could easily afford your college. They didn't have to save for it. It wasn't that expensive. I mean, in terms of, your income, and maybe it was 1 month's income, or it wasn't that big a deal. But what happened was the politicians, went to this, to get the votes of the students, because they lowered the voting age down to 18, in the 60s. So now you have a bunch of students, and here's what the politicians basically told the students to get their votes. Why should you have to work all summer? This is time to enjoy yourself. You're young, go out, go to the beach, go to parties, have fun. It's not fair that you got to wait tables all summer just to pay for college. Why don't the government loan you the money to go to college, right? So that you can party it up. And then when you get out of college and get your great job, pay us back, right? Because you're going to make more money. Why take some cruddy, waiter job? You'll get a job as a professional, and you'll be making much more money. And so that's when you should pay for college, when you've got, a high income, not now, right? So that was kind of the deal. And so the government starts guaranteeing these loans. Now, without the government guarantees, none of the students would have been able to get a loan, because no bank would be dumb enough to make the loan to an 18-year-old that has no assets, right? So the government starts guaranteeing the loans. Now, the colleges, they're not stupid. They know, wait a minute, so these kids can go borrow money from the government to pay the tuition? Well, we're going to raise the tuition. Mm-hmm. And so the students didn't give a damn about the tuition going up, because, well, they were just getting the money from the government. So now the colleges began competing on who has the nicest dorms, who has the nicest athletic program. Because it didn't matter what it cost, because it was all being paid for by the government. And so as the prices kept going up, the government kept saying, well, now we need to guarantee even bigger loans because the tuition is going up, not realizing that it's the loans that are causing the tuition to go up. And so it's a process that continued. And now, it costs a fortune to go to college. Kids are graduating with enormous amounts of debt. Nobody graduated with student debt in the 1930s or 40s or 50s. I mean, it didn't exist. But people still went to college back then. Now, not as many people went to college because you didn't need to, because a high school degree was all you needed for most jobs. But now, because the government has got every idiot going to college, now you need a college degree for what you used to be able to, job with a high school degree. So now people are staying in school for a master's degree or PhD, and they're borrowing hundreds of thousands more. I mean, the only beneficiaries of student loans are the colleges and the universities and the people who work for them, right? Those are the beneficiaries. The students got nothing. All that happened is now they have an expensive degree that has no value, and they have a huge debt. Mm-hmm. And when you see all these politicians, these liberal politicians, this is terrible that the students have all this debt. Yes, and it's because of government that they got all the debt. This is not capitalism. Under capitalism, none of these students would have been able to borrow any money. And so the colleges would have had to keep the tuitions really low so that people could actually afford to go. And then the only people who would go to college are people that actually could benefit. I mean, now you have people going to college that barely even graduated high school. In fact, they only graduated because they're not allowed to flunk them. You have people entering freshman year in college. They can't even read. They're functionally illiterate, and they start off in college with remedial reading, remedial math. Why are these people even in college? Because it's free. Because otherwise they wouldn't even go. But so we need people that just pay for college, write the check, and they're not going to go there unless there's value, right? They're not just going to go through the motions. So we don't need everybody to have a college degree. That's a bunch of nonsense. In fact, there are a lot of people that don't even have high school degrees that earn a lot more money than people with college degrees because they actually have a trade. Mm-hmm. They're a mechanic, they're a tailor, they're a carpenter, they do air conditioning, or they can fix stuff. I mean, anytime something goes wrong in your house and you're looking at how much money you're spending to fix it up, right? These guys that are coming there doing the repairs, they don't have any college degrees.
Yeah.
The people that have college degrees, waiters, they all got college degrees. I mean, what do you need a college degree to wait on tables?
Yeah. There was a fascinating hearing where Maxine Waters was grilling Jamie Dimon about student loans, and he just looked at her and he kind of gave her a smirk, and he was like, "We're not. It's you guys that are making these bad loans." So that was kind of interesting. So we know that the cost of education is going up because of your thesis is government spending. Cost of housing also ballooning. We had the housing bubble back in 08, 09 that crashed, and now we're at all-time highs once again. I think the median home price went up like 24% just in the last year. How is that being caused?
Well, government guarantees people's mortgages. And because the government's guaranteeing the mortgage, the borrower can take out a much bigger mortgage than he would have absent that guarantee. And so now he takes that big mortgage and he bids up the price of the house. I mean, if the government didn't guarantee mortgages, people couldn't borrow as much. And so people that had houses to sell couldn't get as much because the buyers couldn't borrow as much money. So, the buyer doesn't get helped by the government guaranteed mortgage. He just ends up with a bigger mortgage and a more expensive house. If the government didn't guarantee the mortgage, the price of the house would be lower. Now, who benefits? The people who own the home that want to sell a home. If you own a home right now, you benefit by the fact that the person who's going to buy it from you can get a mortgage from the government, and now they can pay you more money. So it's the people who are selling houses that benefit, or the people that are in the building that are constructing houses, developers. But the guy that actually buys the house, first-time home buyer, it's not helping him. It's hurting him because he's now paying a lot more for the house than he would have paid if the government subsidies weren't there. Look, anything the government gets involved in. Look at healthcare. Yes. Why is healthcare so expensive? Because the government is so involved in healthcare, and they've pushed everybody into insurance through the tax code. So you have third-party payers. Anything the government gets involved in ends up costing a lot more, and the quality goes down. Look at the things where the government has no involvement whatsoever, right? Cell phones, computers, television sets. They get better, they get cheaper, right? Nobody is talking about, how the cost of cell phones is going out of control and that we need, why? Because the government's not involved. But if the government was subsidizing cell phones, if the government gave everybody money to buy a cell phone, if they guaranteed, if we made cell phone ownership a right and everybody was in, then the prices would be going up every year. Same as what we see now. So if you want lower prices and better quality, you want capitalism. If you want lower quality and higher prices, then you want government.
Well, it's interesting what you mentioned about technology, because obviously it's inherently deflationary. It gets cheaper and cheaper to buy your TVs and your phones. But I'm looking at a chart that I found really interesting recently of the sector share of the GDP, employment, and S&P 500. And whereas technology makes up just 6% of our nominal GDP and 2% of employment in 2020, it makes up 38% of the S&P. We're like, these charts are just crazy in terms of the bubbles, the asset bubbles that we have.
But that's just because of the valuations. Because if you look at the earnings
the price
that are being generated by the tech companies, it's much smaller percentage. It's just that these tech companies are the ones that everybody wants to buy, and they're willing to pay much higher prices for them. And so that's all a function of the bubble and the cheap money, because in an environment of very, very low interest rates, assets that are going to produce returns in the future, in the distant future, have a much higher value than assets that are producing returns right now. And people are willing to pay a lot more for growth when interest rates are very low than they are when interest rates are much higher. So the way the Fed has artificially suppressed interest rates, it increases the value that investors will pay for tech stocks. So that's why it's such a disproportionate share of the overall market cap is tech stocks. And, you look at real companies that produce real things now and that pay big dividends, they have much lower prices. So all that is going to change when inflation really breaks out and people don't care about nominal interest rates anymore. It's real interest rates. And that, when you have a lot of inflation, then people don't want their growth in the future. They want it right now, and so I think you're going to see a big realignment, which is why I don't own those high-priced bubble-type stocks. They're not going to do very well, and that's why I throw Bitcoin into that camp, because Bitcoin is like a tech stock, except it has zero earnings, so it has an infinity PE. But when people are buying Bitcoin, they're betting on the money of the future. They're saying, hey, at some point in the future, Bitcoin is going to be money, it's going to replace fiat, it's going to replace gold, it's going to do all this stuff, but it's like way in the future. But people are making these bets right now, and they're gambling on it. So I think when the bubble pops, all these tech stocks are going to come down to a much more realistic value, and so will Bitcoin and other cryptos, except in their case, the realistic value is zero, right? Because all these tech companies have value, they're just overpriced. Right? Bitcoin has no value. So everything about the price is overpriced. Anything above zero represents being overpriced. Whereas the big tech companies do have value. I mean, I'm not saying they're worthless. They have good products and they generate earnings. It's just that investors are overpaying for those earnings.
Well, there are very few politicians that I respect right now. I think Ron Paul and obviously his dad would be among the ones that I think have.
Rand Paul.
Yeah, Rand Paul and Ron Paul. Well, I see Ron Paul wrote the praise on the back of the real crash, but I don't know if you saw that, both Pauls are very big supporters of Bitcoin. One of them said that it could become our global reserve currency.
Well, I don't think either of the Pauls are big supporters of Bitcoin. I mean, Ron Paul is a supporter of freedom. So he thinks people should be able to have the freedom to choose to use Bitcoin if they want to. But personally, he doesn't want to. He's a bigger gold bug than me. So Ron doesn't believe that Bitcoin is going to succeed. But he does believe in freedom, and he believes in choice, and he doesn't think the government should outlaw Bitcoin, and nor do I. I mean, I agree with Ron Paul on that.
U.S. Senator Rand Paul, Bitcoin could become reserve currency of the world.
Okay, that's Rand. That's not Ron.
Yeah.
I'm talking about Ron.
Well, Ron spoke at the Bitcoin conference last year. I heard him. He was awesome.
But a lot of people like to pay Ron Paul to speak at conferences. And just because he spoke at a conference doesn't mean, in fact, if you look at his speeches, he never comes out and endorses Bitcoin. So they may bring him to the conference, but then he'll talk about big government. He'll never talk about Bitcoin because he doesn't believe in Bitcoin. I know that because I spoke to him personally on many occasions. In fact, he and I were at a Bitcoin conference together. You know, we both spoke and neither of us agreed with it. Of course, that was a few years ago, but I don't think his mind has changed over the years. And, when Rand Paul says Bitcoin could be, yeah, again, and we could be invaded by aliens. So, there's no way Bitcoin is going to be the reserve for anything. And I don't think Rand Paul believes that either. I mean, I think Ron taught his son well when it comes to sound money. And I think he knows the difference.
Well, going back to sort of the tech bubble, I'm just curious, Peter, how did we get to a place where the CEOs and with the stock buybacks and the options, how are they making so much money? Because I think that's what has a lot of people angry in this country as well, is seeing people like the Elon Musks and Jeff Bezos make so much, and then the average person has a difficult time, getting by.
Yeah. Look, first of all, I mean, envy, jealousy are always, a problem. And that's the dark side of capitalism, is that's human nature. People are going to be jealous of people that are more successful than they are, without really appreciating, the benefit. I mean, would you really be upset if somebody became a billionaire curing cancer? Right? Because, hey, now you don't have to die of cancer. Your mother doesn't have to die of cancer. I'm not going to begrudge the guy that cured cancer because he got rich saving my life. Nor, anybody that makes my life better by inventing something that I didn't even know that I needed until he invented it and showed it to me. Oh, wow. Yeah, this is great. Wish I'd have thought of that. But I'm not going to, be upset that somebody else thought of it. I'm just glad that they did, because now my life is better. And look, there are plenty of people that are richer than I am, right? I mean, there are a lot of them. And, I'm not, more power to them. I mean, I'm not like, but I do know that there are people that have made a lot of money because of government. I think they call them rent seekers in economics, where they have buddies in government. And because of their connections, they're able to get laws that protect them from competition. And there, yes, I am upset when people achieve their wealth by cheating, right? But I have no problem with somebody who achieves it honestly. And obviously you could be a thief, right? You could steal money and then have money that you didn't earn, that you stole. And so, but I'm not necessarily envious that they have these things, but I'm upset that they were able to game the system in order to get things, because their success did not come as a result of helping others succeed. It became at the expense of others. They may have helped put roadblocks in front of other people. And so they made their money by making other people have less instead of having everybody have more. But I think, it's in human nature, and the politicians appeal to it when they go to people, because look, there's a lot of people that will have less money than me, and then they're going to say, oh, well, Peter Schiff has this and he has that, and that's not fair. I want some of that. Well, go out and earn it, right? I mean, if you want something, then earn it, right? It doesn't, it doesn't just come to you. It's not part of your birthright that, just because you're here, you get stuff. You have to earn things. And there are some people that don't want that. They're afraid of having to go out and earn it. I mean, it's much easier if you have somebody give you stuff.
Right.
But the only reason there's stuff to give is because somebody had to go out and produce it. And if you take away all the free market incentives, then nothing gets produced and everybody is equally poor. But I do see, some of these people like, billionaires, shooting themselves up into space and, giant penises or whatever the hell they're doing. And people see this. It's like, God, this guy's got so much money that he's like just going up into space, instead of like going to an amusement park, he's just built this gigantic, ride that costs so much money. But a lot of this wealth, again, is a function of the monetary policy, not capitalism in the free market. So to the extent that you're upset that these guys have so much, like instead of just having 1 billion, they have 100 billion, maybe one that they earned and 100 that was, 99 was a gift from the Fed, and part of the bubble. It's going to breed that kind of animosity, towards the rich. But again, it's not necessarily their fault, right? They're simply playing the cards that they've been dealt.
Right.
So I'm not going to say, hey, Jeff Bezos is a bad guy because he took advantage of circumstances. I mean, somebody else could have started Amazon. I mean, he did a lot of things right in order for that company to succeed. But without the cheap money, it wouldn't have anywhere near the value. But one of the ways that Amazon was able to really outcompete the smaller companies is smaller companies had to make a profit, because you had these mom and pop operators that had to pay rent and they needed to make money. But Amazon never had to make a profit for all these years because the market was very generous with the valuation because of all the cheap money. So in a normal market, Amazon wouldn't have been able to undercut so many people because it would have needed to generate a profit, which means that its prices would have had to be higher to do that. And so other companies may have been able to survive, but because he had access to all this cheap capital that normal people didn't have, the company was able to go years and years and years without making any money, but everybody was still getting rich on paper, including Bezos, because of the stock. So it's really not a level playing field when the Fed comes in with this artificial manipulation of interest rates. So we wouldn't have anywhere near as an extreme between the rich and the poor, but for the interference of the government and the Federal Reserve.
Right. No, I agree with you. And the wealth is really based on those stock options. Wasn't it a decision made in like the 80s or 90s that allowed that, the stock buybacks and the options that ballooned CEO pay, or how did that actually happen? Because before
they've had them, but back in the day, before Wall Street became a casino, thanks to the government, companies didn't even go public until they were already very successful and generating a lot of profits. Now we have companies going public that have never made a profit. Mm-hmm. They're generating losses. I mean, 100 years ago, a company that wasn't profitable, wouldn't even consider going public. How do you take an idea public when you can't even make money with a company privately? What the public market was for is you would say, hey, I've got this great business. I'm earning all this money. If I scale it up, we can earn even more money. So let me take this proven business model on a small scale, get access to more capital, and I'll just expand and I'll make even more money. But now you got companies going public that have never even made any money, and they're already tapping the public for more so they can fund their losses. This is insanity. This would never happen in a real free market. But also, back, 100 years ago, when companies went public, the founders, right, they owned most of the stock and they made their income by their dividends. But now most of the major companies, the guys that are running the companies barely own any stock. They get stock options where they're incentivized to get the price to go up, but then they just sell the stock that they get. They're not long-term holders. So they're just focused on short-term movements in the price of the stock so they can cash out their options. And then if the stock crashes, well, they just get new options at a lower price. So they always win. It's heads they win, tails everybody else loses. I don't think a lot of these stock options really align shareholder interest with management, when management is just short-term focused, but the shareholders would be long-term focused. So, but this is the market. The market, I don't need the government intervention, but I think if we didn't have all this cheap money, if we had real interest rates that were much, much higher, and there was more of an emphasis put on real earnings and real dividends, these type of compensation packages would not exist.
Just to start to wrap up, talking about the actual crash, we're obviously not there yet. We keep kicking the can down the road, but when interest rates maybe do go up, or when the government does decide to taper, if we were to go down as far as we need to in order to shake out the debt that we have, how bad would it be for the average person? Because I guess I would argue that the politicians are trying to keep this bubble afloat because it would be so painful, and crashing down from the high we've been on for so long is going to not be very pleasant. So how much would people have to suffer for us to get to the point of reworking the system?
Well, a lot more than they would have suffered had we done the right thing 10 years ago. So the problem is, the longer we wait, the more that happens. But they're already suffering now, even though we haven't done the right thing. And the thing is, I think it would be more short and sweet as far as how it would work out for the average guy. But one thing would have to happen is that people would have to stop buying stuff they can't afford. And so living beyond your means is going to have to come to an end. Now, it's going to come to an end eventually anyway, but the sooner the better, right? The sooner we can stop digging the hole, the sooner we can start filling it back up again, right? So we can delay the inevitable, but only by making it worse. So, if we have to have a reset, and now it means, hey, don't buy stuff that you can't afford. Save up. You want to buy something, pay for it out of your earnings, not using your credit card. And a lot of people who are currently living off the government, well, you're going to have to go back and get to work. So those are the people who are going to have the biggest problem, right? People who are just getting a check from the government and don't do anything. All right, well, now you got to do something because the check's stopping, right? But a lot of people, a lot of middle-class people who are paying a lot of taxes and struggling with 2 or 3 jobs, their lives could get better right away. But overall, we'll all benefit from smaller government and more economic freedom. And the sooner we stop doing the wrong thing, right, the sooner we'll start benefiting from doing the right thing. Because America, we built a phenomenal society. As I said, with a middle class that was the envy of the world. We could do it again because we do have better technology today than we did 100 years ago, 200 years ago. So if capitalism did so well back then with the technology that existed then, imagine how much better it would succeed now with all of the technology and all the infrastructure that we already have that our great-grandparents didn't have, right? So we're in good shape. We just have to clean house and have a clean, fresh start and take advantage of all the things that we do have, but stop, get rid of all these impediments that we've created with all the government programs and all the regulations. So, there will be some short-term growing pains. Some people will feel it more than others, and some people won't feel it at all. They'll just immediately benefit. But overall, the nation will be much better off. And even the people who suffer today, 5-10 years from now, they'll be much better off. And they'll certainly be much better off than where they're going to be if we just keep kicking the can down the road and then we have hyperinflation. And that's a much bigger disaster for everybody.
Yeah, it's hard to imagine a world where America is making things again. We've basically shipped all of that off to China. One of the last reports I did for my former network was I stood outside where like 70 shipping containers were stranded on the ocean. They couldn't come in because everything is blocked. And it was just amazing to think about how much we've taken the money that we've printed and gotten in stimulus and shipped it right away to China to purchase things that are coming in.
Right, but China got the short end of that stick because we got all their valuable stuff and they just got our paper. But see, the question is, when will the Chinese stop doing it? That's the problem for America when we're off the Chinese gravy train. And, that day is coming, and it's coming soon.
Yeah. And we were talking about the trade deficits earlier before this interview, which is fascinating. Well, one thing that is made in America, Peter, is Bitcoin. We've moved the mining over on this side. So here's what I want to ask you, because we have so much in common. Like the Bitcoiners and the Austrian economists who like Bitcoin, they believe the same thing that you believe, and they want smaller government and less spending and a return to hard money. So let's just say in an imaginary world here, Peter, that Bitcoin does succeed and Bitcoin returns us to a hard money society. Like, wouldn't you be for that? Wouldn't you be like, you know what? Okay, it's a digital form of what I love. It's digital gold, but like it's getting us back to a place where we can have an economy functioning on supply and demand and real interest rates. Wouldn't you be for that?
Well, I mean, there's a lot of, what ifs in there because Bitcoin isn't hard money and it's not digital gold. So it's none of those things. So it can't work. I mean, in a hypothetical world where it could work, but I live in reality. I don't live in some kind of fairy tale where I can suspend the rules of reality and just decide that I'm going to believe in something. It's just impossible for it to happen. I understand why people want to fantasize about it happening, because if you already own Bitcoin and in that world you become really rich, because of the fact that you own Bitcoin now and it becomes so much more valuable in the future. So there are a lot of people that want that to happen, but wanting something to happen isn't going to make it happen, especially when it's impossible. So can the price of Bitcoin go up? Yes. It can go a lot higher, or it can come crashing down. It will never be money. It will never be a replacement for gold or even a fiat currency. It's not going to be a medium of exchange or unit of account. It's not going to satisfy any of the requirements of money, because it can't. But what it can do is appreciate, as long as there's enough fools that don't understand this and they have money. But, there's an old expression about a fool and his money, and eventually they part, right? So that's going to happen with Bitcoin. And it's unfortunate that some of the Bitcoins are made in America. I know not as many are made in China anymore, but they're made all around the world. But it's a complete waste of energy. It's unfortunate that we're wasting energy making nothing. And a lot of smart people are involved in businesses that are centered around nothing. All of this is malinvestment. That is part of the bubble that will ultimately be purged when the bubble pops.
Is there anything at all that would change your mind about Bitcoin?
I don't see how, but as I said, I've told other people, if I'm proven wrong in the future and Bitcoin, 50 years from now, whatever, if I'm still alive, or maybe 20 years from now, 30 years from now, if Bitcoin actually has replaced the dollar or something like that, and people's salaries are denominated in Bitcoin, not paid in Bitcoin, but you get a job and you're working for Satoshis. My salary is 10,000 Satoshis a week, or that's my salary. Your rent is 10,000 Satoshis a month, right? You get your electric bill, it's in Satoshis, right? You buy an insurance policy. The benefits are in Satoshis. Your premium are in Satoshis, right? Everything is set in Satoshis. You go to a store and all the prices are in Satoshis, right? If all of this happens, then I guess I was wrong. It's money. It's working, Now, it won't work forever because it's all fiat. It's all a confidence game. So one day it will crash. But I don't even think it's going to get to that point where it at least succeeds for a while as being money. I don't think it's ever going to achieve that status. Right now, the only status that it has achieved is a collectible token. People collect Bitcoin and they trade Bitcoin with their friends, right? They're like Beanie Babies, except they're not cute. They're not snuggly. You can't put them out on your bed. You just have them, in cyberspace. And that's it. I guess the NFTs are a little bit better because there's like an image, and you can have like an NFT that is like, has an interesting image in your computer, and you can look at it, because all the Bitcoin look the same. Although Bitcoin don't look like anything, but they represent them as a coin with a color with a B on it to kind of make it look like gold. But they don't look like anything because they have no substance. So it's just whatever you want to imagine about a Bitcoin. That's, but it's a string of numbers that exists in cyberspace. That was the result of solving a math problem.
Well, I guess if you're wrong on Bitcoin, then that meme will be correct of poor dad, rich son, which would be hilarious.
Yeah, it's funny too, because, he's not rich yet. He doesn't have that much Bitcoin. Whatever he's got is in Bitcoin, but he's only 19. So how much can he have?
All right. Well, last question to finalize this. For the average person who might be watching this, I've read that most people in the country actually don't hold most of their money in assets or stocks. They might not have real estate. A lot of people actually still save in cash. The world around us is getting crazier and crazier. We are in this bubble. Real estate's going up. We have Bitcoin. We have gold. What should the average person do right now to protect themselves? Let's say we do have this massive crash coming, and it could happen at any time. What should the average person do to take care of their families?
Yeah, well, one thing you can do is stock up on the stuff that your family might need that isn't going to perish. You can as long as you have room in your closets or your basement or your attic, just do your shopping for next year and the year after that. Do it right now. Obviously, certain things, you need to buy fresh, but there are a lot of things that, toiletries or certain kinds of foods that, won't go bad, at least over the next several years. I think batteries have a certain life, but you stock up on those, or but things are going to get more expensive, and they may get in short supply, especially if we have price controls and rationing. But yeah, your long-term savings should be in real assets. I like dividend-paying foreign stocks for my more affluent clients. Gold and silver are also a good way for people to store their purchasing power. If you don't want to fill your house with a bunch of stuff, just buy a little gold, because you could use your gold and silver to buy that stuff, because the prices will come down in terms of gold and silver. They'll go way up in terms of fiat currency. Although you still might have the problem of availability. The products may not be there. So in some cases, it's better to actually get the products when they're available, rather than try to buy them, even if you have sound money, when they're not available, or they're just available on a black market or something like that. But for people who do have, more money to invest, they should contact me at my companies, Euro Pacific Capital, Euro Pacific Asset Management. We have separately managed accounts. I'll manage portfolios for people of international dividend-paying stocks that will, preserve their value in inflationary times and return higher dividends that will offset the increasing cost of living. People can buy physical gold through SchiffGold at SchiffGold.com, and buy bullion, coins and bars from me. We have very low markups. We're not trying to bait and switch people into collectible coins or something like that. It's just bullion, close to the price of spot price of gold and silver. And then to educate yourself, just keep listening to my podcast, Peter Schiff Show podcasts, on all the podcast places. SchiffRadio.com is where I host it. It's also on my YouTube channel.
Love it. Love your shows. And I'm going to add one to that. Vote in people who understand economics, right?
Yeah, well, there's not many of those.
Exactly.
They're usually not even on the ballot. You'd have to write them in.
Exactly.
So they're not going to win.
Thank you so much, Peter. I really appreciate your time. Thanks so much for joining me.
All right, take care.